Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, August 4th, 2025, we're diving deep into Amazon, ticker Amazon, which has seen a shocking plunge in recent trading. Despite reporting Q2 2025 results that actually beat top and bottom line estimates, the stock has fallen sharply, raising many questions for investors. News headlines from just 2 days ago confirm this rapid descent, with phrases like plummeting today and getting obliterated dominating financial media. The primary reason cited for this unexpected sell-off is the disappointing growth from Amazon Web Services, or AWS. While AWS revenue was in line with expectations, it failed to accelerate from the previous quarter, especially when compared to strong performances from rivals like Microsoft Azure and Google Cloud Platform. This indicates investor concern about Amazon's competitive positioning in the crucial and highly profitable cloud computing sector. Adding to the bearish sentiment, broader market indices, including the S&P 500, also tumbled recently, following a weaker-than-expected July jobs report. However, some analysts are viewing this pullback as a potential buy-the-dip opportunity, citing Amazon's overall retail strength and significant AI investments. Now, let's turn to the charts to see how this news has manifested in price action. Looking at the daily chart, we can clearly observe the dramatic drop that occurred on August 1st, 2025. The candle for August 1st opened significantly lower, at 217.21, compared to the previous day's close of 234.11. This gap down represents the immediate, pre-market reaction to the AWS growth figures and subsequent guidance disappointment. The candle ultimately closed at 214.75, cementing a substantial decline and confirming the negative investor sentiment reported in the news. Prior to this, Amazon had been trading within a relatively stable range around the 230 to 235 level throughout late July 2025. To truly understand the intraday volatility surrounding the earnings announcement, let's switch over to the 15-minute chart. If we focus on July 30th, just before the earnings, you'll see a surge in price, especially towards the end of the trading day, indicating pre-announcement optimism. Specifically, the candle at July 30th, 2025, 1953 Universal Time Coordinated shows a strong bullish move from around 229.93 to 234.43. However, once the market reacted to the AWS news, we witnessed an almost immediate reversal of that optimism. The subsequent day's opening, represented by the very first candles on July 31st and then the massive gap down on August 1st, paints a clear picture of the market's disappointment. You can see the sharp drops occurring in rapid succession, reflecting the high selling pressure that drove the price down from the 234 to 235 range. This rapid sell-off is also characterized by significantly higher trading volumes, as seen in the large volume bars accompanying these bearish candles, which confirms strong conviction behind the selling. Now, let's zoom out to the 1-hour chart to get a clearer perspective on short-term trends leading into and immediately following the event. Notice how the stock had been forming a relatively strong upward trend from mid-June 2025, reaching new highs above 225 and even breaking 230. The recent decline on August 1st broke this established short-term bullish trend. We can see a prior support level around the 225 mark, which was breached with the latest drop, indicating a shift in momentum. This level, which previously acted as support, may now turn into a resistance point for any potential rebound. Returning to the daily chart, let's identify key price levels to watch. The immediate support level is around the 214 to 215 range, where the stock closed on August 1st. A bounce here could signal stabilization. If this level breaks, the next significant support appears to be around the 200 to 205 zone, which has historically provided strong buying interest, notably in late 2024 and early 2025. On the resistance side, the 220 to 225 area, which was recently a consolidation zone, now acts as immediate resistance. Above that, the previous high of 230 to 232 and the recent all-time high near 238 will present significant hurdles for a sustained recovery. The increased volume during the recent sell-off suggests strong institutional participation and a significant shift in sentiment. For short-term traders, the current situation presents both risks and opportunities. Reasons to be bearish include the negative sentiment around AWS growth, the broader market's weakness, and the break of recent support levels. A sustained move below 214.75 could confirm further downside to the 200 to 205 range. However, reasons to be bullish, especially for long-term investors, stem from analysts by the dip recommendations, emphasizing Amazon's overall retail strength and its substantial investments in AI. If the Federal Reserve signals potential interest rate cuts due to weakening labor data, this could also provide a tailwind for growth stocks like Amazon. For a short-term bullish reversal, we need to see a strong rebound from the 214 to 215 support, ideally accompanied by high buying volume, followed by a decisive reclaim of the 220 to 225 resistance level. In recap, the important price levels to monitor are the immediate support at 214 to 215, followed by stronger support at 200 to 205. Resistance levels are found at 220 to 225, and then the pre-earnings high of 230 to 232. An unbiased prediction suggests that Amazon is likely to consolidate around its current 214 to 215 level in the very short term, with a 60% likelihood of testing the 200 to 205 support if selling pressure persists. Conversely, there's a 40% chance of a quick bounce towards 220 to 225 if, by the dip, sentiment gains traction, reinforced by stronger-than-expected retail news or positive macroeconomic indicators. Keep an eye on upcoming economic data releases, especially any further Fed commentary, and any new updates on AWS performance versus its competitors. These factors will be crucial in determining AMZN's next significant move, and we'll be here on Explain the Charts to break it down for you.